Take two. So thank you for taking time to meet with us today. We're going to spend a little time talking about some of the immediate opportunities that we find from the data that you provided us. And we're going to really just kind of go over some of our solutions and what we find. This is not a sales presentation, so just feel relaxed, feel comfortable to be engaged. Our whole goal is just to spark interest, to explore some of these opportunities further. So we're not going to ask you to sign anything, pull out your checkbooks. That's not what we're going to do today. All right, how does that sound? Sound good? Perfect. So we're going to just kind of go over a little bit about who we are, what we do for some of you that weren't here the first time. We're going to also talk about just the continuing regulatory change. We're going to talk about increasing account transactions, as well as managing overdraft services, and then talk about just repricing checking accounts with fees that consumers are willing to pay for, and then acquiring new profitable accounts, and then what this all means to you. So a little bit about the company. Again, we're based and headquartered out in Fort Lauderdale. We've been in business for over 20 years, and we just really focus on retail checking accounts. We consider ourselves like checking account nerds, checking account specialists. We have over 450 accounts nationwide. Employees, we're about 110 employees. Myself personally, I'm responsible for all of California. And really, we just generate more revenue and we just drive new accounts. And at the same time, reducing the non-interest income. So here are the suites that we provide. We provide about 10 solutions. Today, we're only going to really focus on 3 and maybe 4 of the solutions. Really what we're going to talk about today is just addressing the usage, talking about the inactive accounts. How can we get an inactive account to become active? Because we know once they become active, that generates 80% of your income. And then also, how are we going to manage that active account with some service, okay? We're also going to talk about just repricing and repositioning your product for the future with the checking accounts. We know that consumers are willing to pay for services. Not all of them, but some are willing to pay for services. And we'll also talk about that. And then we're also going to talk about just, if we have time, making your pie larger just by adding more quality accounts. All right. So before we begin, let's just talk about like just what's happened in our environment, right? With Reg E and all the regulatory changes going on. What we find and what we have done is we partner with financial institutions that are growing the revenue or staying flat at the same time, all right, as well as staying in compliance. That's really the big takeaway I want you to understand. With all this going on, people are growing the revenue and they're staying compliant at the same time. So the first solution, our account revenue solution, ARS, we love acronyms. It's increasing account transactions. But before we talk about increasing transactions, let's talk about like the landscape of what has really happened. Talk about the free checking and then how consumers transact, right? So 30 years ago, everybody was getting free checking accounts. Me, perfect example. I think I have 4 debit cards, one from a bank, two from a bank, one from a credit union, and then I have another one, maybe like a money market. But I only use one. I only consider one as my primary financial institution. And that's average of financial institutions today. Over half of their DDAs just sit on the books, banking somewhere else. So are you really their primary financial institution holder or not? So what has caused that is back in the day, a lot of the bigger players had the advantages. They had more technology. They were able to do a lot more. But now things have evened out. There's a level playing field. And what does that mean to you? With that is there's more people that are mad at the bigger players. And I can guarantee you in this room, you guys get phenomenal excellent scores. So our whole goal is to capture that mad member when they're upset at the bigger player. And we'll show you how we do that, okay? But what are they doing to become, their primary financial institution? We talk about activity. If you have the activity, I'm doing this as like debit card transacting, right? If you have the activity, you're going to be able to capture all the other services, such as like online bill pay, multiple services, direct deposit, all right? So again, activity is just defined by just the debit card usage. How many times you're swiping, how many times you're using your debit card. All right, so let's talk about top drivers of fee income. non-sufficient funds, overdraft, and interchange, right? Those are the top two drivers of fee income. And we know that 20% of your clients, 20% of your client base is driving 80% of the fees in your institution. So how can we grow those fees? How can we increase your revenues? By adding more members, of course. But are these 80% of customers any different than the other 20%? And what we find and what we show is no, they're not any different. They're just simply banking somewhere else. You could take the same type of user that you have today and the same type of user that's just sitting on your books not doing anything, and they're just banking somewhere else, generating that revenue. Okay? So right here, we're going to talk about 4 different users. This is not your data. It's basically a sample data, but it's going to give you an example of really what we find. We're going to break out into 4 different users. Like I said, non-holder, non-user, someone that transacts 1 to 20 times per month, and someone that transacts 21 plus times a month. What we find is the fee income per account for a non-user, it's about $78 on an annualized basis. And the variance, when it goes up to 21 or more times a month, $308 on an annualized basis. But what we also find is when we get a non-user to become a heavy user, the attrition cuts in half. And what we also find is the service and products nearly double. That's just taking someone from a non-user to a heavy user. So you're probably asking yourself, how do we do that, right? Now comes the fun stuff, the magic sauce. Once a month, just once a month, we'll take a file from your core and your processor and we'll mirror it into our system. All right, we have a system that basically can dig into and find out your account base and find out who's transacting 0 to 5 times, 5 to 10 times, 15 to 20, 25 plus. So all we're going to do is once we have that data is we're going to just give a simple message out to that member. All right, the simple message is basically do something very simple in this time frame, like in 30 days, transact this X amount. And then we'll take them from like 1 to 5 times a month up to 6 to 10 times a month. Doing something very simple and easy, we found is the way that we can measure and then also get them to transact more. So that's it. That's basically our simple system. And what we find is if we can convert a non-user to a moderate user, the incremental gain is about $175 a year. And if we can convert a low to moderate user to heavy user, the incremental gain is about $105 a year. So our account revenue solution is increasing the number of checking accounts transacting 21 plus times per month, thus dramatically increasing your revenue. So what does this all mean to you? Total revenue over 3 years, a little under $2 million. Total revenue under 3 years. Return on investment, about 2 to 1. This is a pay-for-performance pricing. We bear all the risk. Any questions? Because if there are not any more questions, take 2 is done.